Yeah, not going to comment too much on the overall market, but just more as an observation to say sometimes you'll hear us say things like, you know, keep an open mind or things can change quickly. In about a 24-hour period yesterday morning, about this time, it looked like the market might really get ugly. We had a pretty strong reversal. A number of names on focus that closed well, acted well. And, here we are adding some exposure. So, just trying to point out that we don't dig in with the opinions for a reason because things can and do change quickly. So which is why I continue to be flexible with your observations. And that's, see us adding some exposure here today. So get me questions. We'll try to go right around noon, get through as many of these as possible. First one is from Al saying Mark Minervini started his portfolio risk with 5% risk, then reduced to 3% risk as trades progressed. Now I'm new here and wanted to understand if 5% risk is a reasonable portfolio risk this time too. I'm not sure where you're getting those numbers. If you looked at, and if you're talking specifically about, say, the Minervini Select trades, when we started back in, with MIRM several weeks ago from a cash position, we started with just one trade and we're taking something like 0.5% risk. We might have worked up to 5% overall risk, but again, as things were working. So we didn't just say we're going to take 5% risk and put 5% risk on. Never done that. So when you say things like, is 5% risk reasonable? It's reasonable certainly to work up to that, but I would never just
start
there. This is the whole idea of progressive exposure, meaning you don't want to start at 5. You want to get to 5, leaning on open gains or potentially closed gains in order to get there. And that's really the point of the MST is not to create a model portfolio, because there's another question in here specifically wondering why we're not having all the stops posted all the time for those trades. Well, they're somewhere between 2 and 7%. And we're changing them and moving them oftentimes as we're progressive exposing. So the goal is not to mimic the MST, but to learn how to use progressive exposure in real time as one example. Because when we have a really good example here is how much freedom there is even within the strategy, as there's lots of different ideas. And the next question is on NOW, so we'll go here. This was a name I wanted to buy for the MST coming out here. Of course, in hindsight, I wish we would have, because we'd have been able to stay in it. This is a name Brandon and I, also owned. But we were too long other names and sort of buying in the order of breakout. We didn't buy this one, and then wound up reducing, where I would probably be in this and ON, and maybe even been a little bit more aggressive today, where when you're operating in a list, the way ours is, it's not that you play favorites or just buy the same things, that the MST is buying. There's a lot of lanes and sort of ways in which you can creatively execute the strategy. The question specifically, another question about a crash, which we'll get to. On this one was from Steve saying that he bought early on 8:30 was his question. I don't think you did, Steve. I think you bought this perfectly. You bought it right here. We put it on breakout alert either that day or the day before. I would argue really the buy point was probably 8:29 as it was coming through that pivot that I drew in there. You bought it a little bit late. He's saying I misjudged, so in grading the trade, can you help point out what I did wrong and why you correctly did not take the trade that day? First of all, just because if it's on focus and it's coming through a pivot point, you're not going to get bad grades from us, in terms of and if you traded something off the focus list, then as far as I'm concerned, you're in the ballpark, because those are names that are either viable or imminently viable. Maybe your tactics weren't perfect, but this is absolutely an acceptable and good buy. We started a position right here. And just to give a little, sort of analysis, this is a stock that came out to new highs through a pretty decent sized base here. If you look at this on a weekly too, you'll see, sort of this nice cup and handle here. Came out on the earnings. Lost my drawing, but came out on the earnings in a weak market. This is the general market here. And we had the biggest correction in the NASDAQ we've had in 18 months, and it couldn't even come back take out its 50-day. So this was a really short little pivot and there were very few setups sort of coming off the general market lows on August 5th, for those of you that remember. We had a little bit of accumulation, so we wanted to buy something. So we just started a position right here because the name had held up really well. Then I actually added on this day. We still own it. We were able to, to live through this. But if you look, okay, you had this correction in the market here, this correction here, this stock went to new highs, and then the market coming off a few percent just pulled it right back into this range. Isn't doing anything wrong, and it's acting really well.
Yeah, look at that relative strength line on the chart. It's making new highs.
Right in a new high ground, and it's actually, this is, we bought the name, for the portfolio, or excuse me, highlighted it yesterday as a potential buy, on the platform. Just because, okay, looks like what accumulation day in the market late in the day, what's something we can buy that's even still acceptable? Well, if you measure this, even to say these lows, this is still relatively tight. And a stock that's in new high ground, as the market's on a day, the market's just trying to, find its footing. This is, potentially what a leader looks like. Also has decent fundamentals. It's in, a growth area that produces big winners, so it looks really good. Question from Michael saying, is it possible for Mark to comment on the volatility in the NASDAQ the last 3 days? I guess the NASDAQ's, I guess, it's able to do 100 points up, 100 points down without any problem. Then 300 down, 300 points up. Is this a sign of overhead supply demand, or is this a sign that there's some type of a crash coming? Or contrary, is this a sign that the low is forming? I have no idea. That question doesn't really mean anything to me, because it's not relevant. If a crash is coming, you're going to see stocks start stopping you out and failing, and you're going to be in cash well ahead of time. I traded through the flash crash. I traded through COVID 2020. Even trading in 08, if you used any type of good risk management, you're out well ahead of time. Right now, we're seeing signs of stabilization. Has the NASDAQ been volatile? Well, yeah, a little bit. And then, this was a big decline here. So we're just working on, sort of the right side of a base. And as the NASDAQ, even, today's a good example. Don't look at the indexes. The NASDAQ's not doing anything. We're having individual names are starting to move. So if you're watching this, you're missing the action, in names, like this, that are breaking out and going into new high ground. Let's see. Roberto is saying this morning Focusless had CP&G and LLY, which seem to have very wide price action recently, not as tight as VCP. Did they make it into focus because of recent highs and breaking out from the 50-day? Again, I think your observations are, I wouldn't say they're that bad or wide. Now, maybe to new highs, but listen, could you try Lilly right through here as a pullback buy, with a stop here? Absolutely. It's a little V-shaped, and you're right, it might need a little more right side development, but it's close. It's acceptable. CP&G has just held up really well. This was a name, again, ripped to new highs, pulled back. If this tightened up or even stays tight today and comes out tomorrow, I think it's viable. Down to these lows, you're right. It's a little wide, so you might have to use a percentage stop, but this is a name, you got a clear VCP forming here. Can we get another little tightening here? That would be even better. Naveen saying, can you go over some of the breakout recommendations in the group where it looks like the stock has run up the right side and is tightening above the base breakout? How do we approach trading such a pattern using DVA or Axon as an example? Following exactly what he's asking.
I am not actually.
I was hoping you had that figured out. All right, well, let's just take a look at DVA and Axon. I mean, this is an example almost of like what we would call like a cap, where you have this small, your base is down here, stock comes out and then it puts in this small little pattern on top of this base. But if you measure this, this is acceptable. This is mid-single digits. You really could have started the position, maybe 2 days ago, coming through here and then buy more, as it comes through here. But it was definitely buyable through 156.44. And there's a number of things going on in terms of activity, because I know This is a name, we had on Focus that was definitely close or potentially viable. Axon, sort of similar. You really had two pivots here. You had the pullback buy, which it kind of gapped through. And I would have liked to actually have bumped this. If this had opened inside, say like here, and then as it came through this high, I would have bought some, and then as it came through this other high, I would have bought more. It gapped a little bit, and it really, kind of took off pretty strong here. Again, depending upon how aggressive you wanted to be, you still could have done that. Still could have, bumped the position up. But that was our plan going into the day, was, buy a half and then buy a half more if we can get going. I wouldn't have even minded to see this build out a cheat a little bit more. Now we might see, does it build some type of a high handle, or do we get a pullback buy back to this other level? And then we'll look to potentially add to the position there.
Listen, the way I look at these is, and in this example on AXON, it had such a strong reaction to earnings, and it kind of, wedged up, and then now it's had a natural pullback. And that key low on, what is that low there 4 days ago, 1, 2, 3, 4, 5 days ago, where the reversal bar is. Do you have the data on that, Marky?
This one.
Yes.
9.6.
Yeah, that's where the kilo starts. And then it's like at that point, you start watching it to see if that can hold, and see, the next 3 days, or the next day it gaps up, and then it just kind of backs in a little bit. And that's exactly what, we were looking at this morning. And it's just like, this is, after you do this a while, you start to see these natural movements in a stock. DVA's, again, similar. It kind of just naturally pulled back, and then, Marky, pull that chart back up for me for a second. I want to point something out. I think it was on 8:30, that low on 8:30. Yeah. See how the next 1, 2, 3, 4, 4 days are inside that day.
And this is all where even, this general market pullback is happening. This is not just going sideways, which is why this relative strength line, it's a subtle nuance, but this is the type of name you want to look for. And, now 1 day off of a stabilization, it's in new high ground.
Yeah.
That's what a stock that's being accumulated in its own universe looks like. I was going to make the same comment on Axon, where if you look, obviously this came out on earnings here, but right off the market lows, it goes vaulting into new highs. And then as the market pulls back, it puts in this orderly pullback. And, in very short order, back in a new high ground, that's good tennis ball action.
Yep.
Jerry's asking, why is there no stop? Well, okay, I already talked about why there's no stop. It's posted on the MPA select trades. But listen, we're using the same criteria and stops, or very similar. Sometimes the exact same ones that are posted to the platform. Sometimes we're being tighter, sometimes we're being wider. And again, these are recommended stops even on the platform. You don't have to use them. Those are maximum stops. How do I rate the book? Gabriel's asking about MIRM symbol. How do I rate the buy yesterday? This was one I looked at. Obviously, this is definitely contending with some supply up here. Seems like it can't really, punch through. You had sort of little buy points here and here. We played this one, and then after this volatile move, we sort of stepped aside. Look, it's getting a little bit, it feels like the train isn't quite coming in on schedule. Yesterday would have been aggressive. Look, can you buy it? Try it again coming through here? Sure. I think right now there's probably better ideas. I do like that the volume though has stayed, relatively dry in this period. So if any real demand comes back into this name, I would expect it to be back up, near those highs and potentially getting through them. Michael's saying I have a hard time distinguishing extended stocks from proper setups. I would have rated Axon, especially TGLS, as extended. Are Kava and SE also viable setups as well, or extended? Can you give me general rules to spot the difference? Let's take a look at, when we're talking about like extended, okay, this stock, this is a big base here. You just came out of this base, came back in, and now you're turning back up. So this is really just a handle here. This is definitely not extended. This is, even if you bought this, think of it in terms of if I bought it in the last 2, 3, 4 weeks, you're at the same price. How could it be extended? An extended stock is something that, has no right side and is just run up the right-hand side.
Kava should be a good example. Pull up Kava.
Right.
This is extended.
This is extended. And again, even could you have tried to make a case for it? The stocks held up really well, obviously, and earnings were really good.
But 70 to 128, I mean, that's a big move.
Yeah, percentage wise, this is a huge move in a very short period of time, and it's only the only pullback and pause you had was a few days. That's an extended name.
I mean, the way to think about it too is like the people that bought down in that 70, 80 area, they're at a nice profit. They might start selling, and that's what you don't want to be caught in, is just natural profit taking. So when you buy a stock that's extended, that's not coming from a base, that's what you're going into potentially. So that's why it's a little bit higher risk to be playing in the short right sides like this one.
Mark is asking about SLNO. Yep. Asking if it's buyable above 50.81. It is. The question here is these reversals. You've had this reversal, this one, and this one. So I am, I see a setup like this. I see exactly what you're looking at. This right side playable. Absolutely. I would start a position here, and then I would anticipate it to potentially either stall out and then build maybe again. So maybe it comes up here, and then you put in another little iteration, and then you look to add, coming through something like that. It could just go. So, and if we're really transitioning to maybe an easier dollar environment, it probably will. But there's definitely been some supply there. So that's how I would handle it. Rahul's saying, hi, Mark. Good to see that there's a lot of buys today. Just had a question about TGLS. The 5-minute chart looks extremely thin. Does that not bother you? Is it best to skip it? Well, if we're talking about thin, meaning, maybe it's a little bit spreadier. I don't look at the 5-minute in terms of the chart for how thin of a trader it is. I look at the daily in terms of average daily volume, and then I just look at the spread. Or the vertical market to see like, how much is offered up and down, and how tight is it? I'm looking.
As far as the spread, I mean, it's not bad now. I mean, I know what he was saying. It was kind of spotty trading, but again, like once the day kind of starts,
Yeah, listen, and normally I'm looking for, and this is trades 20 cents wide right now. I would call that a little spready. This is where you just adjust your position size accordingly based upon how many shares you're comfortable buying. But as a general rule, that mid cap, small cap area is where the really good alpha is. So unless you're running a ton of money, this is where the edge is. There's a better edge in mid to small cap names. Doesn't mean you can't trade the mega caps. We trade those too, and there's an ocean of liquidity there. But unless you're running a ton of money, a stock that trades 200,000-300,000 shares a day, that trades at $60, that's not a concern, at least for me, in terms of, unless you're running, large sums of money, multi tens of millions. Gary's saying from this weekend stock analysis, this is a question for Brandon. You reduced ARM on 12/14. Was it to reduce based on the action from the other stocks? You're only at 1 R under normal conditions. I thought we prefer holding there.
Yeah, that's a good question. I'm just bringing this up.
Let's go back to something here. So a little bit.
I mean, it was a 10% gain though. So
well, I was gonna say we did not reduce it 1 R.
No, it was a 10% gain. So that's why we reduced it. Plus, it was getting short-term extended as well.
And again, maybe our end of the line stop was here, but we weren't taking a 10% stop on the entire position.
And actually, because we bumped it.
We bump it through this pullback buy.
I think that's right. Yeah, and then again,
I think we bought it. Yeah, I think we bought it here, coming through this breakout, and then bumped it here, and then took off maybe the overweight this day.
Right, exactly.
Sold the rest into here or something like that. Robbie's saying I have a hard time understanding the Axon buy. Isn't it extended? Yeah, we just talked about that one. Aren't those the ones we're trying to avoid? Do it not? Okay. Let's look at that again, just for a little bit of clarity. Oops, gotta go back to the right date. In terms of this, you're right, it's short. And it's held up really well. So this is sort of, is it creative? Yeah, it reminds me a little bit of that Burlington stores was sort of similar. Where I'm just saying, relative to the market, it's holding up so well. This is where it should go. If this stock is really, under accumulation. And is this acceptable? It's not hyper extended. You've pulled back orderly here, and you've got a nice, what I thought was going to be more of a more built out sheet. It's a little short right side, which is why we started with a half position. Similar question, when you talk about where we are on the mountain and the rate of acceleration, is it better to assess the acceleration in a weekly chart? For instance, the daily chart that pops in the earnings would make the stocks like SFM seem extended all the time. Yeah, I think I understand what you're saying. There's nothing wrong with looking at the weekly in terms of like how big of a move have we had. This just came out of this base. You get this pullback as it's turning back up. I mean, you could almost argue this is sort of a weekly pullback buy that we're trying here. But this isn't a name. I mean, this was really when the market transitioned. I know because we bought this stock coming right out of this base. This was sort of your really first base, in my opinion. So this is your second stage base and sort of a pullback to that prior breakout. Did it pull back all the way? No. And that was my point. It's been really strong, relative recent. And one of the things we like to do, even in corrective periods, what is holding up the best in the last 2-3 days? What the NOW is a really good example, though, of another one that just in this big base came out on the earnings. We're trying to find a low risk way to get on board. Damon saying, hi, Mark and Brennan, do you have any tools or strategies for identifying and buying breakouts without letting stocks get away from you? For example, do you place buy stops to mitigate the possibility of the names getting away from you when the list gets larger? Do you do all your trading on the fly in real time?
You want me to answer that?
Sure.
Oh yeah. So listen, we have alerts, and then when those alerts go off, we look to see where the offer is to see how far up it is. Do stocks get away from us before we can buy them? Absolutely. That happens all the time.
Buy more Axon this morning. We get it on.
So, listen, if you can't sit in front of the screen, you got to use a buy stop. If you're able to sit in front of the screen and you're able to monitor it, then I would use alerts. And then as soon as those alerts go off, you look to go to market with your order. But yeah, sometimes, they move so fast that we can't get on everything we want to get on. That happens, sometimes quite often, especially with the size we're trying to buy.
Daniel is asking about, and yeah, the other, as far as special tools or strategies, we're using the same things that everybody else has. We don't, I just want to be really clear. We don't have magic indicators or better orders or anything like that.
Well, listen, SDHC is a good example for the select trade, earlier. Like I literally was like just staring at that, making sure I did not want to miss that one. And I was actually surprised on how good of a fill I got because, when it went off, I wasn't staring at the screen like I wanted to be. But I hit it as soon as that alert went off, which was just ahead of the pivot. And sure enough, it went through the pivot and I got filled at, 20 or 10, 12 cents above where I wanted it. So.
Yeah. And listen, the more you do this, the more you'll get a better feel, especially for certain stocks or, a little bit of a tape sense and how aggressive you're going to need to be in some situations. Or, there will be times where you realize, hey, I might want to buy 20,000 shares of a name, but you're not comfortable based upon somebody else asked about, thinness or liquidity. Well, that's when you got to back off or figure out what's the size you are comfortable with and you can get out of quickly. Liquidity is your friend, remember. So this is where you don't want to play into a situation where you put on what, too big of a position that you then can't get out of. What were the price levels you were using for the Mark is asking about the price levels used for Costco and for SDHC. I guess we have SDHC up. Yeah, we were just kind of looking at this as it turned back up here. I think it poked out earlier in the day, and as it took out the intraday high, sort of combo here. Saying wanted to try and buy it. This is actually one, sort of creative power play-esque, not quite a double off these lows. Again, this residential building group, held up really well. This one, you know, is relative to even some of the other ones already in new high ground, if you will, and trying to buy it just as it's turning back up. And seeing a number of questions on some of the entries, like, hey, are these, you know, are these creative? Or, yeah, sometimes they are. But we're just, you know, we're dipping a toe here and seeing if we can get on a few names with low risk, rather than just, you know, chasing something. As far as Costco goes. So what was the actual pivot level there, Brandon? Well, I want to say it was just 9 on. Was it the intraday as well?
I believe that's right.
The intraday high?
I think so.
Yeah, sometimes you get a situation where, okay, maybe you want to buy through this high. And this is exactly how I would have preferred to do.
Yeah, the pivot was 902. We got to fill that 905.64.
Right. So if you gap up or you don't want to buy something right away, and then it pulls back in, sometimes what we'll do is we'll reset the alarm at the day's high, given that wherever that is, it's still acceptable, meaning it's not so far extended, because sometimes, you know, these stocks will open up or it'll open up maybe a little bit noisy and then pull right back in. And so, yeah, we give it a little bit of time. Or if it doesn't come out cleanly, like I was talking about at AXON, you can, and then, but starts pulling back in intraday. So maybe it gaps up a little bit, 0.5% above your pivot, and then starts, you know, pulling back into the range. I'll just set a stop or an alarm at the new intraday high and see if the stock can then, you know, sort of get back going, you know, versus maybe it was just a, you know, aberration early in the day. This is a tactic we use, but I already had a question on SMTC. Okay, one on ABUS. Daniel's asking, I bought it as it broke out on 9.3. Yeah, we talked about this one last week. Yep. Okay, bought it perfectly. Sold half into strength on 9.5. What would you want to see before buying back the half sold? This is going to have to do quite a bit of work, in my opinion, to buy that back at least, and, you know, meaning days to weeks, because you're pretty extended from this pivot now. You know, on a percentage basis, if you're buying at 4, you know, this stock ran up, you know, 15-20%. And, you know, even just looking at how tight this pivot was, you know, this is pretty tight. So you're at 3-4R. If it pulled back in and did, you got a nice close, some type of a pullback buy, where you get early pullback buy like this, you know, maybe you close up in the range here like that. I think you could try it maybe on the next day, something like that. That'd be more of an aggressive play. But right now you're short term extended and you already own the name, so I would just sit with it, or wait for it to really, you know, build out another, you know, base or pivot, but that's going to take weeks. We talked about that. Furkan is asking about SMTC. What are your thoughts on the pullback buy setup today? Yeah, this one's a little funky and not one I had on the radar. Look, it came ripping up this right-hand side. I like that. You know, is this technically a pullback buy? This big reversal here and gap down is kind of, you know, a little scary to me. I mean, what's the percentage on this thing? That's a pretty decent decline, you know, 38-40%. And you're running, yeah, you're running right into that. So I would expect this to stall out here. I'd like to see it build out a little more. I do like the 97 RS. You know, I just don't like, you know, we're running into, you know, that massive, it has marked itself up pretty good here. So I would expect it to stall out and build. If I was going to buy this, I would just start a position here and then see, can we get more right side development in here? Because you're still running into this reversal, which I think is, you know, definitely some clear overhead. I also had a question on FRPT. So which made the focus? Do you think it's a bit too volatile in the handle area? This is a situation where I think, you know, obviously we got knocked out. I think you could have stepped right back inside, back in this name even yesterday. Still acceptable and buyable. Even today, you know, down to this low, it's 7%. That's acceptable. the name's held up really well. We tried to get on board. We tightened some things up and got shaken out. Well, sometimes that happens. That happens to us all the time. If you're going to use, good risk management real time, occasionally you're going to get shaken out, which means you need to have a tactic, for getting, or a plan for getting back in. We had a decent close 2 days ago. Yeah, I think it's even potentially viable today. If it stays tight here, we get, and maybe another pivot developed in here. I think you could potentially add if you didn't add the name back already. Greg saying, I noticed similar entries on names like APP, SDHC, Anon, TGLS. Is that enough to start looking at it as a potential technical theme? And how do you use that? Would you favor a setup that looks similar in coming days? Maybe, Greg. I understand what you're asking. And for those who don't understand the question, is sort of saying, when we see a number of these setups that look kind of similar, APP, where you've got just, this sort of shallow drift back, goes inside for a couple of days and then goes. You certainly can. These would be, just handle, like this is a short handle. Yeah, I think so. I wouldn't get too hung up though. Just look for the low risk entry points versus the theme. We sort of see the theme once you start screening, and it's like we see another 5, 6, 8 stocks, that look like this. But it's more, are they working? Everything. How do you know when is the correct time and what is the appropriate setup to take the approach? If this one doesn't work, then nothing will. What are your thoughts on that, Brandon? That's an interesting question.
Yeah, it is an interesting question. I don't know if I know how to answer it, to be honest with you, but I'm trying to think of an example where we would say that. I mean, listen, APP was a name that we came in yesterday saying like, hey, this is one that's willing to buy. We didn't take the approach though that if this doesn't work, then nothing will. So, I guess that those are special situations where maybe we're in a market that's predominantly weak and we have a high RS name that's holding up well. Or a power play that has a pretty clear pivot that should, as the pressure comes off the market, should work. Is I guess the way I would kind of view that response.
I would add too that just because we might take that approach doesn't mean we're going to be right. It's more of our way of saying we're more comfortable, say, buying one name in a solid setup versus, buying 3 names and spreading it around a little more. Well, even if you look at how we handled the MST, we sort of spread it around a little more, because, we don't have, one setup that, we have maybe a little bit more conviction in. So I want to just caution you, from just adopting that mentality. I'm saying, I've said, if we've taken that mentality occasionally, the other situations would be really high RS situation that's really tight, meaning it's held up really well, it's really strong. So in a market where things aren't working, if I can't make money in a 98 or a 99 RS that's tight, then then I'm probably not going to make money anywhere else. Tim is asking if AFRM is a power play. Yeah, I know what you're asking because of this. Doesn't meet the technical. Did this double? Yeah, it did. But your problem is it's an 86 relative strength. On top of it, this pullback is already more than 20%. It's an 86 RS, and it's not really coming out of it's not even at new relative highs here. So it's just sort of shooting off the lows, and the right side doesn't look very good either. So power plays, ideally we want, 99, 98, 97 relative strength. Mike is asking about HASI. Can you evaluate? Well, I think it was viable yesterday. If you want to own it, it's a REIT. A little bit lower RS name, but the base is fine. Look, you got a clear VCP, you got a clear pivot point. I mean, even here today, I probably would have started a position here, and then I'd be adding to it today. It takes out the new highs. Down to this low. It's acceptable. So I think it's okay. We don't trade the REITs, there's not a lot of alpha in this is another one, utilities. some of the more conservative names, banks, utilities, insurance, it's not that we won't trade them or buy them. We'll definitely point them out when they're really tight. They just don't have the alpha that some of the other names do. So, that's why, and that's not where the biggest winners in stock, in the history of the stock market come from, historically speaking, in those groups. Again, 84 RS. Could you play this little pivot here? Yeah, I think so. But this is more, again, it's sort of in my mind, a flight to safety trade, not like a growth momentum one. Ian is asking about ON. Do you think there was enough supportive action to buy on Tuesday? You mean yesterday? I also, or excuse me. Oh, I'm sorry. You were talking about 9/10, not yesterday, which was 9/11. I also considered buying it yesterday as a more typical pullback buy. I ultimately didn't buy due to the volatility and my recent lack of traction. I'm curious if I'm thinking about the tactic correctly. I love that last comment. Basically saying I didn't buy due to the volatility and my recent lack of traction, meaning I don't want to go out the risk curve in a situation that is maybe less than suboptimal. Look, was this buyable? We had it on focus. We talked about this on Monday, and I said, I think, yeah, you can trade it. I think these lows are key. I was on Real Vision a couple of weeks ago. They asked, this is when the stock was up here, and I said I would not buy it here. Of course, they asked me to come on 2 weeks earlier, and this is a name I was stalking. So I was going to tell them, look, if we come, if we consolidate and come through this area, I'd be buying. At that point, I said, do not buy it. You can look to buy a pullback, to the prior breakout. Sure enough, we had really a 1-day pullback. To the breakout. We still own it. If you were in the name, and you de-risked the way we did, this shouldn't have put you under any pressure. And this is also where, de-risking, again, is that tactic. It allowed you to sit through the pullback a little easier. This was an aggressive bias. And yesterday I would not have bought once it did the outside day.
Yep.
And that was what made it even tougher. And sometimes you have that. The market has a big reversal, and then you get sort of a lot of these outside days. Well, you got to wait then, because it's harder. There's not a lot of low risk entry points in terms of, some of the stock charts. Well, that means you just wait. And look, if we're transitioning, I want to be really clear. And I think it was in the morning note, like, you don't have to be in a hurry.
That's right.
Don't have to be in a hurry, and don't give into sloppy tactics. Don't chase things way above pivot points. Wait for them to properly develop. And we said this even, a few weeks ago when the market started pulling back in again, saying, look, this might just be setting larger right-hand sides. So if you had to jockey for position and ramp exposure back down to some degree, which you should have, most likely, that's normal. And then just be ready, because we may see a whole nother wave of setups in coming days and weeks. He's also asking, can you share some guidelines for determining the breakout price level for a stock, for example, NTRA? Yeah, this was one yesterday. We just highlighted coming right through this little, this pullback to this prior breakout, found some support. You went tight here. I can try to understand the question, right? Thought the breakout price would have been 123. But we put a breakout at 119, right? Because you were breaking above this little pivot right here. So this is just a little, sort of cheat area, if you will. Also asking for clarity on NOW purchase. Well, as I said, okay, we wanted to buy the name really here. Didn't get it bought there. It didn't set back up. But this is where, okay, it's already in new high ground as the market's bottoming, and you want exposure. I'm going to look around to go, what's acceptable? Well, if you measure here, even this is still mid-single digits.
Yeah.
That's
7%.
Yeah, 7%. If you bought it even a little bit earlier, and I'd said to Brandon this morning, I was like, if NOW pulls back in or gets soft, I want to buy the pullback for the MST. That was our first plan. If we get a week open in the market, this is a name I want to try and buy because it feels and looks strong. Obviously, we didn't get that. But back to a point where I'm comfortable with the percentage. And so that's why we start with a quarter position. Christian is saying, topic of risk of total equity. Please clarify when NPA says risk no more than 1 to 1.5% total equity per trade. This applies in the aggregate at the portfolio level as well. And you are not suggesting that one could, for example, enter 4 trades, each with 1.5% of ROTE for 6% of aggregate portfolio. For example, 1.5% could be all in one trade or split into 2 trades. Furthermore, if one, okay, I'm just gonna read the rest of this. You understand the question, Brandon?
I'm trying to.
I think you're understanding it somewhat correctly, Christian. My comment would be there, I would not start with, you said in terms of, say, you know, total portfolio level risk of 6%, meaning you take 4 trades where each one risks 1.5%. Well, look at the way we did it in the MST today. What did we add? 1.5% total risk?
I mean, it's closer to 1.25, but yeah.
Yeah, less than that, while adding, I don't know, 40% exposure.
Yep. Listen, yeah, and I think what you're saying is, and I don't know, from the way I'm reading this, you want to be hard and fast, and that's good. But listen, when the game changes, you want to open up a little bit, is what I would say. So, like, yes, initially you don't want to take more than 1.5. And you know, as you can see, we added 3 names and we added 1.25, you know, total risk to the portfolio. So, but when things are working, we'll open that up, because you're not going to get, you know, large returns by just taking 1.5% risk on your portfolio or 2%. You're going to have to open up a little bit.
Right. And this is, you know, again, when you see us ramping up and down, the point for the MST is to show how you can do that and do it relatively quickly. We're already up on the AXON, so we're willing to buy something. Things are already moving in our direction. If we'd have bought that name and immediately got pancaked, you know, or stepped in front of a train, we would not have been buying anything else. So it's even on the micro level to say, okay, are we willing to go out the risk curve a little bit? And this is also based on the fact that what were the names of yesterday in our universe doing? The ones that went through even viable pivot points, some of them took off. Well, that was a signal to say, all right, we're seeing a change in character. And then we're acting incrementally and bumping things up according. So, and I know everybody wants a mechanical answer, but you know, we're not running a quant fund here. So, you know, we're gauging the price action and bending with things in real time.
Yeah, and that really takes time to learn. So I hope with, you know, the MST, what you guys have seen is, like, even though we have our worst case scenario in our mind, we can still jam it to make it so it's not so bad as things change. So every day you have to have the mentality of, what is the market telling me? And if you don't know, that's okay. But just make sure you have your spots so you don't get, you know, whaled over the head by something unexpected.
Well, and there's a really good point too, in terms of in a lot of questions like, well, we'll just post the stops. Well, if we change them 3 times, then everybody's going to get mad we didn't, or I wasn't able to keep up with the stops. We're trying to teach people how to be their own operator and to act professionally. Well, to Brandon's point, and it was 2-3 weeks ago, or was it last Monday now? I'm trying to remember.
Yeah.
Beginning of the month, we come in, we're looking to get even longer, and very quickly we went the other way. And quickly jammed a few stops, ran worst case scenarios, and tightened everything up.
Yeah.
And listen, if everything comes unwound here, we get a really nasty close, distribution comes back in, we'll be jockeying right back down. And it's going to be the same every time. A rule saying, or asking about in August, from August 26th to the 3rd of September, get knocked out of 8 out of 9 positions. Before the sell-off, he was 65% invested by leaning on tiny open profits on stocks that were acting well. I did not have open profit to de-risk except for ONON, so I stayed disciplined by holding all 9 open positions to initial planned stops. As a result, lost 3% of my total portfolio. The only stock that didn't hit my stop was ONON. The first question is, if you had nothing to lean on, why are we getting longer? Well, you know, if there's nothing to lean on, you shouldn't have been surprised by the loss. So if you were comfortable with it, then I would say you did fine. sorry, Will, I'm trying to find your.
Yeah, it's it down a little bit more.
Questions.
Yeah.
Losing 3% a week is an acceptable loss to portfolio while jockeying for position. That's the question I'm asking you. Did you feel like, well, based upon my plan and what I knew going in, that I was okay with that? I would say, from starting in complete cash, I don't want to lose 3%. I certainly wouldn't lose 3% on the first trade or two. And I would be looking to, if you look at how the MST did things, we got all the way up to 100% invested and wound up above where we ramped back down to. And our worst case scenario was break even after that point because we were leaning on more open gains. So there's how you can minimize that. Is 3% acceptable at the end of the day? Yeah, it's still acceptable. And that's where you just have to ask yourself, okay, was I being too aggressive? Did I not have enough open trade equity? Or what stops could I have, potentially cinched up to bring that number a little bit down? Remember, saving bets or this concept of, saving downside really does add up over time. This other question is on ONON was the only stock that held up during the sell-off. I attempted to sell half the position on a pullback, or I attempted a half position pullback by yesterday with a staggered stop. But it shook out the prior 2 days low, then turned around and broke out of the pullback by pivot. Could you critique my plan there? Like I said, this pivot in ONON, it was not ideal. And because it went outside first, I can't, did this poke its head out early? Is that what he's saying, Brandon?
Yeah, good question.
We can check that. And then maybe you got knocked out. And again, prior to, even midday yesterday, things were not looking very good.
Yeah, no, it did not.
Did not. Okay.
Not based on my 5-minute chart. It opened below 9/10's high. So
I like the staggered stop plan though, Arul, especially if you're gonna and that's probably how I would have handled it, what you described, if I was gonna buy the name back. Is your last question is portfolio risk containment today, because it was coming from a 3% portfolio decline. I de-risked selling half at 1.5 R to help me hold the remaining through the pullback for a bigger move. Was it a right move booking half considering? Well, okay. The right move in terms of how to handle that stock, I wouldn't necessarily be just looking at the portfolio loss. What is the stock doing? How is it acting? This is, if we're talking about ONON, you weren't clear. I think that's what you're talking about. This is just getting in a new high ground, coming out of, another short correction. This is okay for, those are swing traders. You had your pivot here. This is your first move. Pull back to the breakout, totally normal. And now we're back in a new high ground. So ideally, I would want to hold this, until it, moves higher, and then maybe even through one more natural reaction, because it looks really strong. It's acting really well. Michael saying, last stock analysis, you described your buys of OII and KRYS. Why did you only buy 5% position in those stocks?
Yeah, well, again, that was coming out of a period where we had not been trading very well. So, we were taking a smaller smaller position approach, and 5% is really the smallest we want to go. So, those were kind of initial buys, in a period that we had not traded very well in. So
yeah, Michael, for us, if we're trading small, it's because for one of two reasons. We're not seeing the ball well.
Stand them.
Yeah, that's another one. TNDM going off. I would not. Again, this is sort of just turning up here. I'd like to see this build out a little bit more. It's also it's a little wide here, but getting close. If we're trading smaller though, to finish up the prior question, it's either we're not seeing the ball well or liquidity issue, meaning the stock. We'd like to buy more of the name, but we're at our sort of liquidity threshold. There are names we'd still rather have a 5% position in than no position, so we'll just buy a smaller position.
Well, and listen, sometimes we start with a 5, hoping that it's going to build out for us to add, and
That's
sometimes that doesn't happen.
We're incremental, right? We're coming from a period where we're being a little bit more conservative. Yeah, absolutely. And we want to use those smaller positions too to gather information. Tobias already talked about FRPT. Let's see. Fahimi saying on APP. For the pullback trigger, there was no good close on the previous day. Was it still viable? Or would you avoided that for this reason? Good question. I see what you're asking, but you had two really tight, sort of inside days. But again, this is a little short. I'll be the first one to say, we debated about this. Had this been a little tighter to this low, because this is about 6% here, I would have lobbied to put this on the MST as well. But we're coming out of re-engaging. I could easily sit here and play Monday morning quarterback and say, oh, we should have bought. But even Brandon and I bought a small position. I was surprised how well it acted. It just took off. Well, the best way to change your view on the market is to be in the market trading. Let that dictate your opinion. When I see a name like this, the market came off intraday and this stock didn't budge. It stayed at about this level. Then when the market came off the lows, it just surged into new highs. Acting like a classic leader.
Yeah, and I'll just add to, again, this had a 50+% move from 60, 67 to the highs of, what was that, 93 or something, and then pulled back like 11 or 12%. And with the earnings on this is one we've been stalking for a while because the earnings are so strong. We want to try and, find a spot to get on. And yeah, did it not have a typical pullback buy with a good close? Yeah, you're right. However, it went inside, like Marky said, on, decently low volume. And that was kind of the tip off for us.
Let's see. Abdul is asking about, can you critique my entry on EAT today at 70.72? Yeah, I would call it unnecessary, and there's no pivot there. And what are you gaining by getting in? Maybe you were buying over the prior day's high, but even this inside day in terms of its context doesn't make a lot of sense. This is a name that's held up really well and continue to hold up pretty well. I would be, re-engaging. If you want to buy it, I would just wait for it to move back, above this pivot, and ideally, I'd like to see it, maybe even tighten up. Or right now, this hasn't really participated. If you do something like this, I think it would look a little better. Tobias is asking about Meta. Do I think it was a pullback buy today? Yeah, sort of similar to kind of the Netflix where we're back in that, the few of the mega caps, if you can't beat them, join them trades. This just gapped above that high. I think if it had opened inside, didn't hold up quite as well. I also don't like this reversal on the bigger volume. I'd like to see this, build some type of a pivot back into this area. Andrew's saying ON dropped significantly at the beginning of the day yesterday. I considered using a pullback buy. Yeah, okay, we've had a lot of questions on the ON. We already talked about that. Let's see. Holy cow, we're getting close to time here. I didn't realize.
Yeah.
Time flies. Talking stocks. Giancarlo's saying, what are your thoughts on buying PRMW on a pullback buy? This is the buyout, right?
I believe, yes.
Yeah, we've talked about this one a number of times. I think this is under proposed merger. What do you about buying? But as far as this setup in a vacuum, it's not the worst. But your real pivot was down here. Again, this is assuming it wasn't a proposed merger, as I would stay away from that. He's also asking about SEMR. And look, lower RS, this doesn't look good to me. It's sort of sitting on its 200, really. It just doesn't have very good relative strength. And you're running into, you want to play this little cheat, and you're running into this supply and this supply. This is stair stepping in the wrong direction. You want these, successive, you want to have the opposite look. See how it's making, lower highs. You want the higher lows and the tightening to be happening up near the highs. And if you're going to play a low cheat, I want to do it in a high RS situation, or a highly followed situation where the low cheat isn't as obvious. Lynn is saying, why are some of the stocks posted only like breakout alert and don't make it to open positions? For example, PHM today. Well, we're just highlighting them moving through, what are potentially viable pivots, or alerting you guys if you want to buy stuff, it's moving, or it's potentially going through a pivot. Not everything's gonna wind up on open positions, and some of it depends on how we're viewing the general market and how our trades and breakouts holding on balance. Let's see. John's asking, is SDHC a cap pattern? Well, September 9's high, the buy point is the squat on increased volume. I wouldn't call this a cap pattern. No, this is sort of a power play-esque. You're just trying to buy that first, natural reaction as it turns up. And this is definitely creative. So this is, this is definitely a little short, but if you look even in terms of the pullback, okay, this meets the criteria of more than 10 days. You didn't quite have a double, went up 90+%. Your first pullback here is just over, 10. So you've got that, 10-15%. You've got that high alpha, low standard deviation. And this is honestly where it should build out now. And if you can get on some type of a low cheat or low pivot, what we like to do is sometimes you move back up into this area, you can de-risk part of the trade and then see if it builds out and look to add those shares back. Ian say, like to re-ask regarding squats and reversals. If a stock squats on a breakout, do we hold and wait? Brandon?
Yes, we do hold and wait. I mean, listen, squats happen all the time. And I try to make this point in the stock analysis. When you initially enter a name and you buy through the correct pivot with a good sound technical stop, there's really nothing to do once you're in the trade. You really want to just sit and wait to see if it can hold that stop. So if it squats, if it breaks out, squats, comes back in, there's nothing to do. You really just kind of sit and wait. Unless, God forbid, everything's coming in and you have too much risk on, then you could sell. But generally speaking, stocks squat, come back into the pivot, more than half percent, 50% of the time. Yeah, so, it's not doing anything wrong if it does that, is my point.
Let's see, we'll do one or two more. Yeah, and the other thing is just the general rule for squats. Look, the bigger the squat, the more ominous.
Yeah, that too, definitely. And listen, going back to the stock analysis, the reason why I'm pointing those out is so you guys can see, sometimes what you have to sit through before stock starts to work. So it kind of gives you an expectation of, well, this is normal. So I shouldn't change my plan just because it's squatted. Unless Marky's right. If it goes up 10% and then comes all the way back down, that could be problematic for sure.
John saying to APP, did you guys miss it? I saw it on Buy Alert. Yeah, we also highlighted it yesterday. So if you wanted to buy it, we pointed it out when it was moving. As far as, look, we had no signs of any accumulation or anything in the market. This leads into the next question by Mike saying, stem on red, haven't had any success. We're buying a bunch of half-size position cheats. Can you elaborate for me? Yeah, we're re-engaging. How else are we supposed to do it? Not buy them? And everybody wants to buy the name, that closed up, double digits yesterday after the fact. We don't know that in real time. And today we're starting, incrementally, re-engaging after seeing, some signs of stabilization. We've got a few low risk pivots. This is where, you dip a toe, the water feels good. Pretty soon you're back in waist deep and then you're swimming in the deep end of the pool. Renee is asking about XBI. Yeah, I actually sent this one to Mark. Let's see. It looks like it's sending price holding around the 50-day. Would this count as a possible violation, hugging the 50, or is it okay with the 50-day in an upward angle? I can't believe that. Thanks, Renee. You're always too kind to us. Listen, this is definitely, could you try and pick this off the 50 here? Yeah, I think you could. This is a big base, and obviously this is biotech ETF, so it's an ETF, but you got a clear VCP here. This is, really just going over to the weekly, you're going all the way, we got a 6 month, pretty nice constructive base building here. So if I was going to buy this, and look, it poked its head out, came back, failed. Now it's trying to reset. You could absolutely buy it here and put your stop, right here, and it's 4%. 4.5%. I think that's acceptable. That's why I sort of, sent it back to Mark saying, I think you're going to run back up here and potentially stall out. But the base looks really good. I think we'll close there. I know there's a lot more questions. And look, guys, you re-dip a toe, use good tactics, and as things are working, you bump things back up incrementally. It's really the same every time. And I was saying, when we started the call, this is why we say, keep an open mind and stay flexible. Don't get too bearish. Things change quickly. And if we start to see, more ideas, or really, even more right sides, we have a number of ideas, just more right side development, or even resets, maybe a number of the names that you get knocked out of, they reset and you get chances to get back on board. That's what I'd be looking for in coming days and weeks. Stay tuned to the platform for updates. I will be out next week, so everybody have a good week. I'll see you all in 2 weeks, but yeah, be looking for the weekend video. Stay tuned to the platform, and then we've got Q&A again, most likely with Mark and Brandon on Monday.
Yep. All right, guys, take care.